Hello, everyone. Today, I've dived into the concept of price action used in technical analysis, and I decided to cover one of the specific patterns for you. Guys, this chart pattern is called the double top, and you've probably heard of it before. Many methods are used to analyze price movements in Forex trading. The most comprehensive of these is the price action approach. Within price action, chart patterns play an important role. Chart patterns are divided into three main groups: continuation patterns, trend reversal patterns, and neutral patterns. The double top formation is a pattern that belongs to the trend reversal patterns. Before we start, the one thing you need to know is that the information in this video is for general educational purposes only and does not constitute investment advice. I hope that's clear enough. Now let's get started. The double top is known as a trend reversal pattern among chart patterns. We could even say it is one of the simplest and most popular ones. This pattern usually appears at the end of a bullish trend and gives the first signal that the trend is about to change soon. Now let's look at how it forms step by step. During a bullish trend, prices continue to rise until they eventually encounter a resistance. Since this resistance is strong, the price struggles to break through it. Because it can't break this resistance, the price starts to reject and turn back from that line. So we can see a correction movement on the chart at this point. This is when the first top of the pattern forms, just like in the chart you are watching right now. This is the initial signal of the change. If you ask, how far does the price drop? We can say, until it finds support. This support level is very important. We will explain why in a moment. Prices start to rise again from this support in an attempt to break the previous resistance. However, they fail to do so, and the price starts falling downwards again. This means the buyers are exhausted and the sellers are starting to take control. At this point, we can clearly see the second top of the pattern. In a double top pattern, the first top and the second top are almost completely equal because they formed at the same resistance zone. Now let's get to the most critical part of the pattern, the neckline. Remember the support level I mentioned earlier, where prices bounced up from? That support is known as the pattern's neckline. Of course, this is an imaginary line, not physically visible, but the completion of the pattern depends on it. Another component of the double top is known as the height of the pattern, shown as h here in the image. By height, we mean the distance from any peak point down to the neckline. This is also imaginary, and we calculate it ourselves. We use this when trading based on the double top pattern. Let's say you saw this structure, the double top on the chart. That is not enough. The neckline must be broken downwards. Only then is the pattern considered complete, and we can call it a double top. Otherwise, it is invalid. The breakdown can happen in different ways. If the price breaks the neckline downwards and continues to drop without a pullback, we call this a strong breakdown. Sometimes after breaking the neckline downwards, meaning after dropping a bit, the price makes a pullback and may retest the broken line. If the price continues to drop after this, it provides a safer selling opportunity. In some cases, it is seen that it makes multiple pullbacks and retests. In trading based on the double top, the target point is calculated using the pattern's height. You project the pattern's height downwards from the breakout point to confirm the target. This is a highly preferred and time-tested method. Now let's look at real chart examples. The target calculation I just mentioned is shown in the chart you are watching right now. In this example, you can also see a strong breakdown. In this chart, you can clearly see the stop loss, entry, and target levels that I have marked for a trade based on the double top pattern. The entry level shows the point where the trade is activated after the neckline is broken. The stop loss marks the price area where the trade becomes invalid, helping to limit risk if the market moves against the setup. The target level highlights the projected area where the price is expected to move once the pattern completes. Together, these levels make the structure of the trade easy to understand and illustrate how the double top pattern can be used in a practical trading scenario. This example provides a clear demonstration of the double top pattern acting as a strong trend reversal signal. Looking closely at the chart, the double top formed at the highest point of the preceding uptrend, which indicates that the upward momentum was weakening and buyers were losing strength. The first top represents the initial resistance where sellers started to appear, while the second top confirms that the market is struggling to push prices higher again. Once the price breaks below the neckline connecting the lows between the two tops, it signals that the previous uptrend has ended and a downtrend is beginning. In other words, the market has shifted from a phase where prices were rising to a phase where prices are now falling. This change can be seen in the increasing presence of selling pressure and the decreasing ability of buyers to maintain higher prices. Traders often observe this pattern to decide when to close long positions or consider opening short positions. By carefully studying the double top formation, one can understand how trends develop and reverse, allowing for more informed decisions in trading. This example also shows how patterns are not just abstract shapes on a chart, but represent the behavior and psychology of market participants, reflecting how supply and demand dynamics change over time. Finally, in this chart example, the double top pattern becomes fully visible, showing a clear sequence of events that illustrate how this trend reversal pattern works in real market conditions. The process begins when the price reaches a peak, forming the first top, which marks the highest point of the preceding uptrend. This initial top indicates that buying pressure is starting to slow down, as sellers begin to enter the market and prevent the price from moving higher. Following this, the price attempts to rise again, but encounters resistance at a similar level, creating the second top. The formation of the second top is critical as it confirms that the market is unable to continue the previous upward movement and that the uptrend is losing strength. Once the second top is formed, the price moves down and breaks below the neckline, which connects the low points between the two tops. This breakdown is an important signal because it shows that the previous support level has failed and a reversal from an uptrend to a downtrend is underway. After the breakdown, the price often retraces upward in what is called a pullback. During this pullback, the price returns toward the neckline to test it from below. This retest is crucial because it confirms that the neckline, which previously acted as support, has now become resistance. Traders closely observe this step to ensure that the breakout is genuine and not a false signal. Once the retest is complete and the price fails to break back above the neckline, the downtrend resumes, leading to a further drop in price. This continuation of the decline demonstrates the full effect of the double top pattern in signaling a shift from a bullish market to a bearish one. Each phase, the initial top, the second top, the breakdown, the pullback, the retest, and the subsequent price drop, reflects the changing dynamics between buyers and sellers in the market. By understanding this step-by-step progression, traders can make more informed decisions, anticipate possible price movements, and better manage their risk. Overall, this example highlights not only the structure of the double top pattern, but also how it represents the underlying behavior of market participants, showing the transition from an environment dominated by buyers to one dominated by sellers. As a result, we see that the double top is genuinely a trend reversal pattern. But the one thing you shouldn't forget is, never ignore risk management when trading based on any chart pattern in price action. Guys, if you found this video useful, I hope you know what to do. Happy trading!